Guys, Layerzero just did an airdrop. I've been calling out for 2 years. I got like $7,000 in free tokens, and now I'm yield farming with them, earning almost 1% per day, and I'm making this video to show you how. All right. So before we get into it, I do have to say none of this is financial advice. These are my own perspectives, my own research, my own opinions, and should be treated as such. So in this video, I'm gonna briefly cover what Layerzero is. I'm gonna show you how to claim the airdrop. I'm explaining what yield farming is. And I'm gonna show you how I used our tool to find the best pool that is earning me almost 1% per day, as you'll see in this video with real money. So without further ado, let's jump straight into it, starting off with what the heck is Layerzero and what is this airdrop that I'm talking about? So an airdrop is you getting free tokens for using the protocol under the parameters that they specify through the time frame that they specify, and you get free tokens. It would be like getting Uber tokens for catching an Uber before Uber went public, or using DoorDash and getting DoorDash stock. I mean Uber tokens, I meant Uber stock. Getting DoorDash stock before DoorDash went public because you ordered some food, all right? So now let's dive into what is Layerzero. All right, guys, so here we are on the Layerzero website, layerzero.network, and they are essentially, hence the name, they operate under layer ones, under layer twos. They are aiming to be an interoperability layer that connects blockchains. And you guys have heard me talk about for years how Stargate is my favorite bridge. It allows you to bridge seamlessly, quickly, and cheaply between multiple EVM chains, and you can build on top of Layerzero, hence Stargate is built on Layerzero technology, as well as Radiant Capital, and it just allows different omni-chain features such as cross-chain swaps, cross-chain usage of NFTs, decentralized applications, all types of things. It says here, Layerzero is a technology that enables applications to move data across blockchains, uniquely supporting censorship-resistant messages and permissionless development through immutable smart contract, which is tamper-proof. All right, so you guys feel free to go through the website. $50 billion transferred. They're supporting over 70 blockchains. Didn't even know it was that many. And over 200 applications built on Layerzero technology. Now, if you go to their Twitter, this is how you go to claim the airdrop. If you type in like hashtag Layerzero, you'll see a lot of fake links like, oh, claim your airdrop here. Guys, trust me, only get it from their Discord or from their website. Never just rely on some random follower, even if they claim to work for the project. So this is where you go to claim, layerzero.foundation/claim. But if you click on it, I'm in San Francisco, it says error.forbidden. So you need to access this through a VPN. So I use Windscribe. I am not getting any kind of referral or payment from them. This is just what I use. And when in doubt, connect to a VPN in Mexico. I go ahead and turn this on, and then I go ahead and refresh. And now you see the website's working. So you can either paste your wallet here to see how many tokens you'll get, or you can connect your wallet to claim. Now, the thing is, for every Layerzero token that you claim, you have to pay 10 cents as a donation. I think it's kind of stupid, but this is what they're doing, right? The good thing is you will end up claiming more. Well, I guess depending on when you claim it. I mean, what if it goes down to 5 cents? I doubt it. But the price of Layerzero is way more than 10 cents. So you still come out on a net positive. All right, so now that we know what Layerzero is, how to claim, all that stuff, what is yield farming, right? If you watch my channel, you know what yield farming is because I talk about it a lot. You're essentially a market maker, AKA supplying liquidity on different decentralized exchanges. So when people trade back and forth in that pool, you make passive income in regards to what your range is. The more narrow your range, assuming you're doing concentrated liquidity, which allows you to determine what price range you want to provide liquidity for, which is how it works in TradFi, right? It makes your capital more efficient. The more narrow your range, the higher your APR, but also the higher your risk, because if it goes out of your range, you experience something called impermanent loss. It's a limit order for the underperforming asset. So if you're in ETH USDC and the price goes out of range to the upside, the underperformer is USDC. So you're going to be in 100% USDC and vice versa on the downside. If you go out of range to the downside, the underperformer is ETH. So you're going to be in 100% ETH. Okay. There's multiple ways to get a yield, but we're specifically talking about providing liquidity in the form of pairs on decentralized exchanges. So now let me go into showing you my Layerzero yield farming strategy and how I'm making almost 1% per day. All right, so if you guys watch my video on us unveiling our Yield Hunter tool, this enables you to find the best liquidity pools in DeFi in real time. All right, Watch that video if you haven't already. I already show how this works. You can backtest, you can search by chain, protocol, token, minimum, maximum TVL, and you can get all the data going back 6 months. And we're going to keep shipping on this product. We're going to keep adding stuff. So if you see, I haven't refreshed this yet. I'm sure it'll change, but you can see right now, ZRO, which is layer 0, USDC, the 0.3 tier on Arbitrum on Uniswap, is the top paying pool in all of DeFi, right? And the reason why I like this strategy right now, I don't know how long I'm going to be providing liquidity for layer 0, but I like this strategy right now because there's a lot of people who hasn't claimed the airdrop yet. And once they claim it, they're going to sell. And this is literally like selling shovels during a gold mine. If you know it's going to be high selling volume, especially because people are getting tokens for free, the market has been dropping, people are wanting to take some profits, this is a good way to get ahead of that volume. All right. So whenever you anticipate volume, it can be a good chance to provide liquidity and make some good passive income. So you can see right now the APR is 2,662. And if I search by ZRO and then I click off, you see all of the DRO pools. So even that ZRO USDC, it went all the way down to 238% APR. Right now, the top one is ZRO matic. So you see the yields drop down a lot, but they could go back up in a heartbeat, right? I do believe layer 0 is going to pump this cycle. So you got ZRO matic, ZRO ETH, ZRO wrapped BNB, ZRO wrapped ETH, USDC, wrapped ETH on all these different chains, on all these different protocols. So how did I go about determining which pair I wanted to provide liquidity for? So the first thing is, you guys know that I'm expecting us to go into a bull market. And like you always hear me say, unless this is your first time watching the video, the best pairs to provide liquidity for during a bull market are volatile pairs. So that's layer 0 paired with matic or paired with ETH, not a stable coin, because if layer 0 does a 5x, the stable coin is going to be at $1 still, unless it depegs, and it's going to be harder to stay in range. And I want to stay in range because I want to catch those big moves. If I'm in layer 0 paired with Ethereum, and layer 0 does a 5x and ETH does a 2x, I have a higher likelihood of staying in range because on the chart, it's only going to look like, 5 minus 2 is only going to look like layer 0 did a 3x versus doing a 5x. So my range doesn't have to be as wide, right? So now I know I want to do layer 0 wrapped ETH. Okay, so that eliminates all the stablecoin pairs. So now it's like, where do I want to provide liquidity at? These are always changing, right? Well, I chose Uniswap on Arbitrum, the 0.3 tier. This is the one I'm in. And I'll give you a few reasons why I chose this one. Well, one, when I chose it, it was closer to the top. But two, you have a lot of liquidity here. And that means this is where people are going to do most of the trading. At least I think so. And it's a 0.3 fee tier versus 1% or 0.5%. Yeah, you have 0.3, but this is on ETH, right? And I don't know what this token is going to do. So if I have to rebalance real fast, I want to make sure I make my gas fee back first, especially if I'm doing a tighter range, which I am, as you'll see. So if I'm having to rebalance on Arbitrum, I'm paying pennies. It can take me one transaction, maybe 2 swaps within that pool to get my fees back. Also, I like the volume to TVO ratio. You can see that the liquidity in the Arbitrum pool is 1.3 million and the volume right now is 2.3 million. So the volume is double the TVL, right? And Arbitrum is where most of the people are claiming their layer 0 airdrop tokens to. So I think most people are going to sell on Arbitrum versus bridging the Binance Smart Chain or Ethereum or Base or something like that. Even though you can claim at these multiple ones, most people have been claiming from Arbitrum. Now, if I go here and I type in layer 0, I already typed it in. I scroll down here to look at pools. And you can see, I'm on Arbitrum, you can see that layer 0 ETH, the 0.3 fee tier, is number 1 right now, right? And if I click on it and I look at the volume throughout the week, it's been dropping, but this is a token to where I feel like once the selling is exhausted, a lot of people are going to sell at airdrop. It's kind of like an IPO. When IPO comes out, normally it drops because people are like, oh, the investors who've been in it a long time, they want to get their money. Same thing here with these VCs. People are going to sell at first, and I think the volume is going to pick up, which is why, as you'll see here, my range has a little bit of room to go on the upside. So if I go to Deck Screener, you can see my ranges here. Now, right now it's to the bottom, which means it's allowing me to get layer 0 for cheap. So if I go out of range, I'm going to exit some of the liquidity in this pool. And now I have some layer 0 tokens that I accumulated for cheap, because when I got them for free, I sold it into ETH, and now I'm making money. And as it's going down, it's selling my ETH and buying layer 0, which I like. And if we look here, you can see that my range is only 30% up and down, give or take, 29, 30%. So now if I go to revert finance, you can see that I'm getting 329% APR, right? If I expand this, yeah, it's showing my return on investment is negative, but that's because the price has been dropping. I don't look at impermanent loss like that. I have a long-term mindset when I'm providing liquidity inside of my pools, and you can see I've only been in this position for not even a day and a half, 1 day and 5 hours, right? Once this goes up, it's going to be a divergent gain instead of a divergent loss, because the token that I'm accumulating is going up. ETH has kind of been dropping as well. And guys, remember, this is free money. I didn't buy these layer 0 tokens. I got them for free. And now I'm literally getting paid passive income on something that I got for free. So I'm literally already playing with house money. So I'm okay to be a little bit more risky on this one. And just going back to my range here, you're probably wondering like, well, what would make you rebalance? Well, we teach our members in our group. And guys, if you want to get access to the tool, you want to get access to an elite community of coaches and members who has everyone's best interest at heart, and we're all trying to win together, with a world-class yield farming course covering everything on yield farming, security, Web3 and DeFi fundamentals, mindset, literally everything you need to know to be a successful investor and liquidity provider in crypto. Click the link in the description, book a free strategy session. You'll talk to me or one of our coaches, and we'll see if our program is a good fit for you. If not, at least we'll answer any questions you have on crypto, yield farming, and investing, help you demystify, and point you in the right direction. Other than that, I digress. What I would want to see that would make me retest is if I see a break and a retest, and then I see a nice big red candle, not just print, but close on the weekly. Right now I'm on the 4 hour because it's not enough data. Like you'll see if I go to the daily, you don't really get the big picture. Like I want to see these hills and valleys here. Same thing to the upside. I need to see a break, retest, and a close at the top. And that's signaling to me like, hey, momentum is probably going in the opposite direction. It looks like selling volume is kind of slowing down, so I'm hoping we find support here and I can stay in range, but only time will tell. So guys, with that, I like to conclude this video. If you got value, I ask you to consider subscribing, drop a like, drop a comment, share with a friend. And like I said, if you're interested in this content, book a free strategy session. I've been calling out the layer 0 airdrop to my members for a while. I called out the ZK Sync airdrop. Just feel free to scroll through the channels to get proof. I got that. I still have to go claim it. And there are many other airdrops that we're getting our members set up with that we think will be pretty lucrative as we're going to a bull market. So with that, thank you guys so much for tuning in. I love every single one of you watching, and I'll see you in the next video. Take care and trade safe.